What's up, team? It's Lucas here, and we are back. Before we begin, this video is for entertainment purposes only, and it's sci-fi time. So let's get into this. So what do I want to talk to you guys about today? Essentially, I want to show you guys 3 undervalued stocks with a lot of growth potential behind them. So I've been talking about these stocks for a while now, for approximately the last 2 to 3 weeks in our Discord channel. We've also talked about them on our social media channels. But now I wanted to make a video really explaining why I like them, why I think there's so much potential behind them, and why I think that they are good long-term holds. All right, so let's get right into it and start looking at the 3 stocks that I have in mind. To begin with, let's look at Beyond Meat. So Beyond Meat's having a pretty big day today, up almost 6%. And let's go take a look at it full screen. Here, what do we see? So let me back it up a bit, go to the year calendar here. It's had its big up and downs. Obviously, this is quite a volatile stock. If we see, it's run up quite often to this $200 level. It's even ran as high as $221 a share on this last big run up. But, however, in the last 6 months, it's been pretty bearish. So we see it has been selling off ever since it touched that 221, has been selling off. The market's been correcting itself as well, so keep that in mind. But this has been bearish. What do I like about it here? Well, first of all, looking at a bit of the technicals behind it, it is developing a bit of a cup and handle here. It is also looking a little bit overbought, but that doesn't necessarily mean anything. But looking at the cup and handle here, we can see the cup formation, and then the handle will come out a little bit like this. And generally, cup and handles do have a very explosive run, so we could see a big pop in this afterwards. But without really looking at the technicals, today I really want to talk to you guys about more of the fundamental side of things, not really any ratios or balance sheets or income statements or stuff like that, but really what their growth potential is, where they're investing their money, and why they're going to keep doing well. So essentially, we see the last couple of days, Beyond Meat has been running up with increased volume as well. So there's a lot of new money pouring into it. But we were talking about it when it came down to these lows over here. It came even as low as, let's go a little closer, as low as $100 a share. All right, so these were great prices to get into, but these are still good prices to get into now, and don't let this slip by you. Essentially, Beyond Meat has been upgraded. Let's come take a look here. Beyond Meat has been upgraded by a few different financial firms. They're now upgrading their stock price, so it went from an underperform to an outperform. We see that with Bernstein. We also see that with CFRA. So new and other financial firms, they're starting to upgrade them and see the value behind them. Beyond Meat has had a lot of big contracts with other big companies, and they've also got that new contract with McDonald's as well. And they're going to continue to work on new contracts with other big restaurant chains and go into different markets. Eventually, we might see some seafood or different kinds of meats coming with them. All right, so what do I really like about them? Well, they're investing a lot in R&D, a lot in their own research, and as I mentioned, a lot of these new firms are starting to put them as an outperform, a strong buy, etc. So what would I do with them? I would let the steam, this heat of them calm down a bit, because right now it's had 2 big days back to back, and it is maybe approaching a bit of an overbought level. Give it a couple of days, let it pull back, let the steam leave a little bit, and get into your position at a more of a reasonable price, something along the lines of maybe $110 a share, $115, $120, somewhere in that range, and you can continue to add to your portfolio. All right, so the next one I want to take a look at here is Pinterest. What do I like about Pinterest? Well, Pinterest is very similar to Facebook. They make their money off marketing and advertisement. All right. If we go take a look at how Facebook has done over the years, at the beginning, they were a little weak. A lot of their money is going into growth and reinvestment and stuff like that. So their bottom line isn't the best. And we're seeing the same thing here with Pinterest. And Pinterest is taking a very similar path as Facebook did. They're investing a lot of their money and taking that same and going along that same trajectory. So I could be expecting something very similar as to what Facebook was. Obviously, maybe not on that same scale of things, but they're on the same track record right now. So I like Pinterest a lot. This still hasn't gotten its big booms, and it's been beaten down a lot over the past couple of months. Okay, it's come down from these highs of about $80, $85 a share. Its high was actually $89 a share, and is now trading at about $62 a share. So great discounts on this, and a lot of growth potential in the future as they continue to invest their money, basically increase their bottom line, and improve on their gross profit and gross margins. All right, so that would be ticker symbol PINS. Lastly, the stock that I really want to talk to you guys about is, not this one over here. It's going to be Peloton. So Peloton I've been talking about for the past couple of weeks. They've done very well during this COVID pandemic as well. Why have they done so well? Well, some of the main industries that were affected with COVID, with the shutdowns around the world, were restaurants, were shopping malls, and were gyms. So people essentially needed a place to work out. And what is Peloton? Well, it's basically the at-home gym. You can order everything from treadmills to bikes, any kind of at-home working equipment, workout equipment, specifically a lot in the machinery. And that got very popular this year, and people started to invest in that, having an at-home gym instead of having to go to the gym, and as supplementary instead of going to the gym because they were closed. So recently, let's go take a look at Peloton here. Peloton has hit incredible highs throughout the year. They were very bullish throughout COVID, coming up from the low 20s all the way up to about $160 a share. We saw it hit that a couple of times, a good strong resistance up there at about 160, 170 a share, and has been selling off ever since. So a couple of times they sold off was because of earnings, and their earnings weren't bad. Their earnings were great. Their sales were great, but they couldn't keep up with demand. Personally, when looking at business, I think that's a pretty good problem to have. If you can't keep up with the demand, basically their supply chain wasn't efficient enough to be able to keep up with the demand of equipment that was needed. And that was their problem, and that's why they sold off often. But now recently, they've now said, and that's specifically today, and that's why we see them jumping up about 10% right now, is that they're going to be opening up a facility in the USA. So not only are they going to be cutting transportation costs, but they're also going to be increasing their supply. They're also going to be bringing a lot of jobs to the US, and they're also going to, this is a sign that they're investing in themselves for the long-term future. So that goes to show the kind of potential that is here with Peloton. So just going based off previous highs at that 170, that can give us a potential return of over 55%, and that's catching it here today on its high. I would obviously recommend to maybe wait a day or two, let the news of the new facility calm down, settle down, and then get into it at a better price, possibly somewhere around $100 a share, maybe 105. We'll see how it plays out in the next couple of days. But overall, this is still a great stock to have for the middle to long term. All right, so I could see this running up to about 120, 130 a share in the next couple of weeks to months. And eventually down the line, at the end of 2021, I could see this being back at about $160 a share. All right, so their plan here, as we could see, they're planning on spending about $400 million on their new facility. And that facility will be in Ohio, I believe. So really good news overall. Great thing to take a look at, and great stocks that are undervalued right now with a lot of good potential, that are good companies and have good fundamentals behind them. So keep an eye on them: Peloton, Beyond Meat, and Pinterest. Have a good one, everybody, and we'll see you next time.